Hey everybody, my name is Phu with eXp Realty. Today I have my podcast. Welcome to the Phu Bui Podcast. Today I have a special guest, Angelo Ambrosecchia from Cross Country Mortgage. Hey Angelo,
Hey, Fu, how are you?
I'm good. How are you?
Thanks for having me. Appreciate it.
Thanks for coming.
Yep.
Well, Angelo, why don't you tell everybody a little bit about yourself?
Yeah, my name's Angelo Ambrosecchia. I've been in the mortgage business now for a little over 20 years at this point.
Wow.
Yeah, it's been a while. So we've seen a lot of crazy markets. Born and raised in Northeast PA, and I've worked in this area that whole time, and just happy to be able to stay in the area and help so many people purchase homes and just be a part of the local community.
Okay. Yeah, you like what you do?
Yeah, I love it. Yeah, it definitely keeps us on our toes all day.
Right.
But it's very rewarding, and I'm definitely happy that I chose this line of work to be in, for sure.
Okay. What are some of the challenges you face?
Challenges, it's funny because we have guidelines we have to follow. We're doing these mortgages, and our biggest challenge every day is kind of just making sure people are qualified. We have a lot of realtors that send us referrals, people looking to buy a home, and they trust us to make sure they're qualified and they're going to be able to get to the closing table. So on a day-to-day basis, our challenges are making sure that's going to happen, making sure people are qualified, giving realtors pre-approval letters that we know are going to stick, buyers are going to be able to close, and making sure we follow those guidelines, because there's a lot of them as far as, what you can and can't do when you're buying a home, what kind of income we can or cannot count, different credit guidelines. So there's a lot that goes into every deal.
What made you become a mortgage broker?
I started my career working at different lending institutions, and really wasn't finding the right fit as far as like doing collecting. There were some positions where I actually had to do some collecting on some files. It wasn't for me. Right. Wasn't happy knocking on doors asking people when payments are going to be made. So I ended up getting a position with a local bank. Mm-hmm. Was not involved in mortgages, back office position. And they had a spot open up to do home equity loans and unsecured loans. So I thought I might want to get into that part of this, kind of learn the basics from there. And then one day, mortgages got thrown in my lap. The manager at the mortgage department just upped and quit one day, and they kind of came to me and said, "You want to do this?" And I didn't know what I was getting into. So it was a lot. It was a lot to get up to speed on, but I kind of got pushed into it like that, and found that I was pretty good at it, enjoyed doing it, and that's kind of just took off from there.
Everything happens for a reason, right?
Absolutely, yeah. I had no intention of doing mortgages, and when I started out, I wanted to do home equity loans, unsecured loans, nice, little bit easier than the stuff we have to do every day. But I got pushed into it, handled it, and this is where I'm at.
Yeah, that's like me. When I first started in real estate, it's funny how I got started in real estate because I'm sitting there watching TV the one day, watching everybody Chip and Joanna Gaines, or the Property Brothers.
Yep.
I'm just watching TV and I'm like, you know what? Like, if Chip and Joanna could do it.
It's funny, we joke, like, you don't grow up saying I want to do mortgages.
Yeah.
It's not something that, comes up when people are deciding what they want to do as a career. Everybody kind of just gets into it their own way. Right. And everybody's got a story about how they got into it. But it's a great, rewarding thing to do, and we help a lot of people, and I haven't regretted it since. I mean, it's been great.
Yeah, that's as long as you're happy with what you're doing,
Yep, absolutely.
Tell me about your first transaction you ever made.
Well, it's funny too. When I started in the business and I got involved with mortgages, it was on the underwriting side, mm-hmm. which has really helped me when I got into the origination side, because I knew how all that was supposed to work. So I got into the underwriting side, learned all the guidelines, everything I needed to know, and then realized that I wanted to do more than that. I wanted to actually go out and try to get deals, try to meet people, try to help people. And I remember, those first couple closings, just being very, very rewarding. Financially you could do well with this if you're doing enough business. And personally, it's great when you're at the closing and people are tearing up because they never thought they'd be able to buy a house. So that's the kind of satisfaction I got from it. I've been kind of addicted to that since.
Yeah, the satisfaction of helping people and then, making a good career out of it as well.
Yeah, absolutely. I mean, what we're doing, we're not lending money to businesses, and it's very, there's no emotional involvement whatsoever. This is real people, that maybe never thought they'd be able to buy a house, that are found out they can, and then they get to the closing table, and I never thought this would happen. So it's great. It's great when that's why we personally go to our closings. We want to be there to shake their hand, congratulate them. And a lot of them, it's their first home and they're just thrilled and beyond excited that they were able to do it.
Right. Angelo, why don't you tell me about your first deal?
Yeah, it was quite a while ago at this point, Phu. But yeah, when I originally got into the business, I was into the mortgage side of it. I was an underwriter. It really helped me when I got to the origination side of it because I knew the guidelines. I knew how loans were supposed to work. But I wanted more than that. I wanted to actually deal with people and actually try to bring business in. So, I got into that part of it and it's been great. It's been super rewarding. Nothing beats the feeling of going to the closing and having somebody, kind of like tear up a little bit. We never thought we'd be able to do this, helping people buy their first home and walking them through the process. It's been great and it's been super rewarding. And, it's not what we do. It's not like a business loan where it's just transactional and there's not a lot of emotion involved. These are real people that we're helping, local people that we're helping achieve something they might not have thought they ever could. So it's been great and super rewarding.
Right. Yeah. That reminds me of my first deal too with one of my good clients actually. No one. I remember when we first met. He would call Zillow, he would call Realtor.com, and no one would pick up, no one would even give him the time of the day, But he called me randomly one night. I remember it was 8 o'clock at night in the middle of winter. He's like, oh, can we just go see this house? I'm like, yeah, sure, why not? We went, looked at the house, and then ever since then he's just became one of my really good clients. We closed on so many deals, but just being there for people, it.
Absolutely, and that's a good point too. I mean, as far as the size of the deal doesn't matter necessarily on our end. I mean, we're just looking to help whoever we can, and a lot of times, if it's maybe a big lender might not be as willing to go out of their way if it's not a certain size deal, or if it's a small deal that they're not really concerned about. But me and
right, because it doesn't benefit them.
Right. I mean, there's not as much money involved in it for them if it's a $60,000-$70,000 loan,
right.
But the feeling is still there. And we've had a lot of people, my assistant Brooke Hines and I, that we've helped, and they buy that first home, and then lo and behold, they're back 2 years later, 3 years later, buying a house now, much more expensive, but they remember who helped them when they needed it.
Right.
So that part of it is super satisfying for us.
Yeah. It's really hard finding inventory for buyers right now. I have clients just, we're constantly looking on the MLS, Zillow.com, everywhere, trying to find inventory. So what are you seeing for, some of your clients?
Yeah, we're running into the same problem, Phil. I mean, we pre-approve a lot of people. We talk to a lot of clients. And some of these people that we're pre-approving, we pre-approved, say 6 months, a year, 2 years ago, and they're still looking.
Wow.
So, as it's still a great time to sell. Right. I mean, if it's the right property at the right price, you're going to have offers coming in like crazy. So on our end, we make sure they're ready to go on the financing side. There's different loan products and programs, as far meaning like FHA loans versus conventional loans. And it's a little more pressure on us to try to figure out a way to do a conventional loan for buyers, because the FHA loans and government loans are still a little bit harder to get your offer accepted. Mm-hmm. So, we try to do our best with that too. But sometimes, the circumstances of the loan force us to go one way or another.
Right.
So somebody doesn't come to us and we flip a coin and say, what kind of loan do we want to give them?
Right.
The debt to income, the credit score, what kind of money they have to work with. And there's a lot of things that go into it, how we decide on that.
Do you think this trend is going to continue forever? Just shortage of inventory, high interest rates?
No, I don't. I mean, nobody knows for sure what's going to happen with the market. We are expecting there to be rate cuts this year, which will help. As far as inventory goes, we're running into it's kind of like still the COVID carryover. Everybody during COVID for those years that was getting the 3%, 3.5% interest rates, they don't want to sell those properties. They want to hold on to them. So, it's creating a bit of a backlog there, I think, whereas in the past, somebody might sell their house to buy a new one.
Right.
Now they're saying, I'm not giving up that 3% rate. I'm just going to keep it and rent it out. Go buy another property. So I think that's hurting our market as far as opening up inventory. But, I'm hoping as the rates come down, we get into the spring and the summer, things open up a little bit more and there is a little bit more inventory, a little bit of a break in rates, and we see a spike in business because we saw a spike after COVID.
Right.
COVID hit and we were all like, oh boy, are we even going to have an industry after this?
Right.
This is scary.
Yeah. But what a turn it took, right?
What a turn it took. Yes. I mean, COVID hit, a lot of things got shut down. We didn't know how long that was going to last. It was a very scary time. But once things did start opening up a little bit from there, the floodgates opened up because of the rates, and there was more inventory at the time, and we were just doing a lot of business, a ton of business. But we've been through a lot of markets. Like I said, I've been in the business a long time, and I've seen the high and the low of it. So the good agents, the good lenders prevail through it all. You just adjust. You refocus.
You gotta adapt to the market.
Adapt to the market. I mean, we're probably, if we see the rate cuts coming this year, we're probably going to see a refinance market. Mm-hmm. So you might stop hearing from lenders as much because they're busy doing refinances. We focus on purchase loans. That's our bread and butter. We're definitely going to refinance as many people as we can, but we're not going to lose focus of that purchase business. That's what we're here for. That's what we want to do. But the refi market is going to be there eventually here.
Right. What are some of the rates over at your office? You're quoting.
Good question. Because you would think you can call a bank or a lender like myself and say, hey, what's your 30-year rate? And you might be able to get a generic ballpark answer. But the rates right now have never been more affected by different characteristics of the loan. So number one, what type of loan are you getting? What's your credit score? What type of property are you buying? What are you using it for? How much are you putting down? Mm-hmm. All of these things have a huge effect on the interest rate. Somebody that comes to me and has a 760 score is going to get a much better rate than somebody with a 700 score. And that doesn't sound like a huge difference, but in our world, it could be. So rates generally are down from where they were towards the end of last year. They are a little bit lower right now. Mm-hmm. But there's just so many things that affect what kind of rate we could give you. There's bond programs with PHFA that have extremely low rates right now. And we are a PHFA approved lender at Cross Country Mortgage.
Okay.
So if we could fit somebody into that program, they're going to get a really low rate if they fit the guidelines. So it really depends on a lot of things.
Why don't you tell the viewers about, some of the programs you guys provide?
Yeah, there's a ton. I mean, we have the standard conventional loans that most lenders have. We have conventional loans that start at 1% down. Most times you could do 3%. And then you have your 5%, 10%, 20%. So, I mean, a wide variety of conventional loans. We have FHA available. We have VA, USDA. And these are all low down payment loans. So, the fallacy of needing to have a lot of money to put down is just not true. We're getting people into homes for small amounts out of pocket. But we do have all those government programs. We have renovation programs that we can take advantage of. So there's a lot of options. There's a lot of options because that's another thing too. We'll get a call and they'll say, I want that first time home buyer FHA loan. Well, it's not a first time home buyer loan. A lot of first time home buyers use it, but you don't have to be to get an FHA loan. So we really analyze each buyer, and depending again on the characteristics of the loan, we know what type of loan to give them. Okay. And that's what we do. And I think that's the service. You go to a local lender, you go somewhere that you can actually go in and sit down with somebody. That's kind of the extra service we provide. We don't just kind of look at everything and spit out an answer and say, this is what you need to do. We'll look at different options. Hey, did you think about paying this debt off? If you pay this debt off, you'll qualify for this program. So we try to be out of the box in what we're doing and giving people the best possible advice we can.
Right. Yeah. And I'm sure people appreciate that,
Yeah, absolutely. And, if we have a situation where we're competing with another lender and that rate happens to be better than the one I can offer that day, I'll tell them that. It's just, put good out there, you get good back. We just try to be open and honest with everybody. There's no surprises. And usually everything goes very smoothly, and that's kind of our goal on every deal.
Right. When do you tell me about that new program they just had? What is it? The 5% conventional for 2 to 4 units?
Yeah. There was a recent change made. The reason that came about, Fu, in the past, if somebody came in and didn't have a lot of money for a down payment and they wanted to buy a multi-unit property, if to get a conventional loan, they had to put a lot more money down. So if you come to me and you don't have a large down payment, but you want a multifamily property, most cases I have to give you an FHA loan because that was kind of the only option for low down payment. Recently, there was a change where you could get a conventional loan on a property up to 4 units and still put a minimum 5% down. So that's going to open up the market for a lot of people.
Wow, that's really going to help a lot of people, if they wanted to live in one unit and, maybe rent out the other.
Absolutely. And what's the hook on that? For a conventional loan, the property condition, it's always going to be important. But FHA is a little bit more picky with those properties. You know that. If they see there's
a
feature here or there they want fixed, they're going to make you fix it before you close. So conventional is a little more forgiving with that. So it's easier on these 2, 3, 4 unit properties to get your offer accepted if it is conventional.
Right.
So that was a big change, and it's going to help a lot of people.
Yeah, it is. I think so, because when seller sees an FHA loan for a 2-family or a 3-family or a 4-family, they're like, no way, I'm taking that.
If there's 10 offers, and 7 or 8 are conventional and a couple are FHA, what are your odds if you're one of the FHAs?
Yeah. Slim, very, very slim. I know because I went through a lot.
Yeah. So this is great. And, they could put the minimum of 5% down. We could still add in some seller assist if we want to help with closing costs.
What's the maximum seller's assist on that?
On that loan with 5% down, it's 3%.
Okay.
Yeah. So that's another advantage. If somebody is really struggling with the money out of pocket and they need to go with an FHA loan, you could still do a 6% seller assist. Mm-hmm. So again, what did I say before? Loan characteristics. Like if they have enough money to come up with and we can go conventional, great. If we have to go FHA because they cannot come up with more than the $6,000 or $7,000 they have, then you might have to be forced to do an FHA loan. So It just depends, but you could still do some seller assist on that conventional loan too.
Yeah, that's like my loan. My loan was FHA. Remember that was a roller coaster, right?
Yeah, absolutely. Yep, got it done though.
Yeah, we definitely got it done. I'm thrilled. Because I'll tell you what, paying $1,500 a month for a 1-bedroom,
right?
That is crazy.
Right. I mean, people talk about interest rates, right? Yeah. Are they 6%? Are they 7%? What's your interest rate if you're paying rent? 100%, right? Yeah. No, you're just paying somebody's mortgage.
When you bring that up, I think it's funny too. Now, if you go buy a car right now, the interest is like 10%, 12%, 13%. Even like if you go like buy a car right now at Carvana, they're giving you like 20% for a used car, and people are willing to pay that. And I'm like, but you're complaining about 6-7% on a house.
Anybody watching this and they're trying to buy a house and they're in that 150,000, 200,000 range, do the math. Like put the price in at 200,000, put the loan amount in at 190, say.
Right.
And put in a rate of 7 and put in a rate of 6. which is a big difference. 6 to 7 in our world is a big difference, 1 full point. But look at how much it actually changes the payment. It's not going to usually be enough to blow your doors off and be like, all right, I'm going to wait for the rates to come down. If you want the house, buy the house. You could always refinance it later.
Right. I think what was the saying? Marry the rate, date.
Wait.
Marry the home, date the rate. Right.
There you go. There you go. Yeah, and that's the truth. You can always, if you find the right house and it's in the right spot and it's what you want, you're going to let a 0.5 point stop you from buying it.
Right.
I mean, that's probably the money you would save every month is probably 1 or 2 trips for a coffee.
Just drink less Starbucks, right?
Absolutely.
I have that problem, actually.
Absolutely. Yeah. Don't let a 0.5 point stop you. You can always refinance it down the line. People need to know if you get a 30-year loan, when you do come in to refinance it, if the rates drop, you could also lower the term down. I want to drop it to a 20 or a 15, pay it off quicker. So when you refinance, you could change a lot of things if you need to, but don't lose the house over a 0.5 point or a point.
Yeah, they only come around once nowadays, right?
Absolutely. Absolutely. If it's what you're looking for, if it's in the right school district and it's got the yard you want and everything else, don't pass it up because you're waiting for the rate to come down.
Yeah, that's like what I tell my clients all the time. You have one chance, one shot, If you like that house, you better go for it, because if not, there's 3 other people willing to go for it right now.
Yeah, and it could be a long time before another one comes on the market that suits exactly what you're looking for.
Right. And I mean, like, you just have to compromise on, priorities and needs,
Yeah, absolutely. Absolutely. There's still, I'm sure you're out there negotiating for your buyers. There's still deals out there. Values are still going up on properties. So, you find something you like, you should really jump right on it.
Yeah. And
that brings us back to the pre-approval. Why is it so important to get pre-approved?
Right.
If you're taking buyers out to see properties, can you imagine you spend months and months driving them around looking for properties? You finally find the one, and now they go get the pre-approval and find out they can't get a loan?
Yeah.
This is what happens. So get the pre-approval, be ready to go, and be ready to put that offer in when you need to.
Yeah, that's the main thing I always advise my client, especially new clients. Hey, have you talked to a local lender? Have you gone through the pre-approval process yet? So that way, when we see something we like we're ready to go. What are some of the tips you can give to, first-time home buyers, someone that's like fresh out of college, looking to start their own family, looking to buy their first home? What are some of the tips you can give them?
We deal with a lot of first-time home buyers, Phil, right. And we have a lot of literature we can provide, first-time home buyer guides that'll tell you what the terminology is, what is each step of the process. The best thing you could do, again, we'll get back to it, talk to a lender about a pre-approval. If you're not ready now, we could tell you the steps you're going to need to take to be ready. As far as how much money you may need when the time comes. Credit, very, very important. Do what you can to keep your credit score as high as possible. The higher somebody's score is, the more options we have available to help them out. But, as far as talking to the lender, where the money can come from. Is it a family member helping you out? If it is, that's great. It's allowed. You're not going to go get a personal loan. You're not going to get a cash advance on a credit card. So we could walk them through the do's and don'ts, the what can you do and what can't you do. That's what we do on a daily basis. Me and Brooke Hines, my assistant, we talk to people on a daily basis that are first-time buyers. And if they're not ready now, maybe they'll be ready by the summer or in 6 months or next year at this time. But again, your credit score is going to open up doors. Try to keep that score as high as you can. Do a free annual review of your credit report. Make sure nothing is on there that shouldn't be. Try to pay everything on time. Again, the better your score, the more options we have. And no credit is not good credit. So, try to get credit established. Try to get, if you open up a credit card and you're trying to get, your credit going, try to keep the balance low, but use it. Establish credit. establish credit, keep that score high, and we'll be able to open up a lot more doors.
Okay.
Now, I noticed you mentioned, first time home buyers, they can get money to help cover their closing costs, like a gift. So what's like the maximum gift that, they can receive from family members, or who can they receive?
Well, certain types of loans, like an investment property, for example, you can't get a gift. So again, this is why you want to talk to a lender. In most cases, most of the money you need to close could be a gift, but they define family member differently. It can't, you don't want it to be, it can't be a buddy at work. It can't be your girlfriend that you just met a couple months ago that wants to help you out. There's rules about where the money can and can't come from. So that's the stuff that your lender should be advising you on. If you go online and you get a pre-approval and they just send you an estimate and say, here's the money you're going to need and here's your estimated payment, they're not doing you any favors. They should be explaining all of this to you.
Yeah, I know. I had some bad experience with some of these online lenders. I feel like they're just sitting there, just pressing the button. Here you go.
It's a volume game. And if I go online and I fill out a pre-approval and I put in there that I have $10,000, is a person asking me about that? Are they asking me, is it in your account now? No. Well, where's it coming from? What's the plan? You have to dig deep on some of these questions because these guidelines have to be followed or you're going to run into problems.
Yeah, and no, nothing beats when you're like halfway into the transaction and it's like deny,
Yeah, absolutely. And we run into that once in a while where somebody thinks they're going to get a gift from a family member and the family member decides all of a sudden they're not able to give it to them. So you get into scramble mode then. But even for the people that do not have the money to close or do not have enough money to close, there's grant programs available that we have.
Really? Yeah. What do you tell the viewers something about that?
Yeah, I mean, one great thing to look up is PHFA. It's if the viewers want to look it up, it's phfa.org. Go on there and look at some of the homebuyer assistance programs. There's K-FIT loans. The FIT is forgivable in 10 years. So it's a forgivable grant.
Oh, really?
Yeah, every year you live in the house up to 10 years, they forgive 10% of it. So if you live there 10 years or more, you don't have to pay any of it back. But it's great because, like, let's say you go in and you want a conventional loan with 5% down. That 5% could be the grant. So you're really putting no money down. And then you could get a seller assist a little bit on top of that. Now you're really limiting what you're coming up with at closing. So we are an approved lender with them. We offer that program. We have other options. We have other places we partner with where we could try to get you like a second mortgage to help you with your closing costs. There's just a lot of options out there. But again, your debt to income, your credit score, all of this determines for us what we can and can't do.
Right.
So again, talk to the lender, the pre-approval, it all comes back to that. It all comes back to talking to the lender, getting the pre-approval and having a discussion.
Right. At the end of the day, it just comes down to, just reaching out, excuse me, just reaching out and, going over your game plan, and see where you stand.
Yeah. And I think that's the biggest difference. I think that's why we get the amount of clients referred to us that we do is we have a conversation with each of these people because you need to. There's too many things to know.
Right.
You go online and fill an application out and you put in there that we use, if the viewers don't know, we use gross income, not net. So if somebody is making, $60,000 a year, that's their salary. We divide that by 12 and that's their income, gross income. We all wish we made our gross income.
Yeah, I do.
But for now, we are able to still do that. We are able to use the gross income. So, we factor that out, what they're making. But if you go online and you put $60,000 a year in as your income, they're going to just take that, divide it by 12 and say that's your income. We're going to ask questions. How do you get paid? Are you a truck driver? Do you get paid by the load that you drop off? Or how long have you been doing it? Do you work on commissions? Do you get a bonus? Do you work hourly? We get a lot of the people that work hourly and then we get their pay stubs and the year to date number isn't really where it should be or anywhere close. And it's like, well, did you miss time? Were you sick? Did you have a leave of absence? Like, we're asking all these questions because it's all important.
I know, because that that reminds me with one of the deals I had, right? I represent the seller, and I'm listing his property, and we go into contract with another agent and her buyer, and we're like we're done with inspection, we done the appraisal, we're like almost at the end of the game, at the end of the tunnel here, and then they come back and say, oh, she can't get approved for the loan because there was a gap in employment history. I'm like, well, did you guys not go through this? Like before you issue the pre-approval?
That's really what it is. I mean, that's really what it is. It's asking, and we get people that kind of fib about the dates they worked at different places. There's no reason to do that, by the way, if you're getting a mortgage, because we're going to find out. Everything has to be verified.
Yeah.
But you're right. In most cases, it's a loan officer not asking enough questions and finding out after the fact that they actually didn't start when they said they did, or aren't getting paid the way they thought they were. Different things like that that we try to take care of at that pre-approval step.
Yeah, I know, and that deal drive me insane. Because it's just like such a waste of everyone's time, especially for my seller. And, and then you get my seller, which is a good client of mine. Now I got to take the heat from him. He's coming back to me saying, well, you're not doing your job,
Yeah. And a perfect example, because it just happened. We just got a contract today sent over from an agent, and he actually put in the email, he thanked us and said, having a local lender on here helped our offer get accepted. Because they know us, they know we're asking all the questions. But
Right.
If you go somewhere that isn't doing that, you're opening yourself up to that happening more and more. Oh, we didn't know, that they missed time, or there was a gap in employment,
Yeah.
or they changed how they get paid.
Right.
They used to have a salary, now they're commission. It's too many questions to ask to be able to just fly through it and issue a pre-approval letter.
Right. Yeah. And you know what? I wish more people would do that, just save everyone's time, not only the buyers, but, the agents, just saving everyone's time,
Well, that's the thing too, be upfront and honest about everything, because it's going to be found out.
Right.
We verify
Yeah.
everything. People people will send us bank statements, and we're questioning deposits, and well, why would you, they'll say to us, why do you need to know that? So we need to know. We're going to ask all the questions. Any deposits on your bank statement are going to need to get verified. Your dates of employment are going to get verified. Just tell the truth up front. Save everybody the time and the effort,
Right.
because we're going to find out.
Yeah, no, I know. I love getting some of those people that just they're like, they just don't want to tell you anything,
Right.
And it's
like-
right.
I'm trying to help you.
Yes.
Like we're trying to help you. We're not like against you. Like it's not hurting you to tell me the truth.
Just be upfront and honest with it, because you know how this documentation has gone through.
Yeah, because I gone through the process, so I know. They're gonna want, they want everything. I
Statements
know.
with a fine-tooth comb. They're looking through everything, and they're going to question whatever they need to question. So just be upfront and honest about everything from the start. It's going to make your life and everybody else's life a lot easier.
Well, thank you, Angelo. Thank you. Thank you for coming on today.
Thanks for having me.
I think that was a lot of good information for not only first-time home buyers, people who are first-time investors. Lots of great programs you guys have, and I think we really, it was very helpful.
Yeah, there are a lot of great programs. We offer, a lot of them here. Every day it seems like we're adding programs. So if anybody wants to reach out to us, please do. Our website, Brooke and our team is angeloateam.com.
Mm-hmm.
Just go to www.angeloateam.com, all spelled out. And my cell is 570-468-7995. So I can be reached on that number anytime and help walk anybody I need to through the process.
Yeah. So if some of you guys are watching this, reach out to Angelo if you need, if you're a first-time home buyer and you're looking for someone to guide you through the process, someone, just to walk you and give you information on it, just feel free to reach out to Angelo here at Cross Country Mortgage.
Yep. And I'll add to that one thing, Phil. We are licensed in Pennsylvania. I can help anybody anywhere in the state, but we have an out-of-state desk. So if we know somebody that needs help in another state, I have people there partners I could refer it to that can provide you great service also. So anybody that needs some questions answered, just feel free to reach out.
Wow. Yeah, no, that's very helpful, Angelo. Yeah, well, thanks again, for coming on.
Yeah,
And,
thanks for having
I
me.
always appreciate your time.
Yep, great seeing you.
All right, thank you. Hey everybody, thanks for watching the podcast today. Lots of great information from Angelo. Lots of helpful tips. And then, if you're looking to buy or sell your home, just reach out to me on my personal cell phone number. You can call or text anytime. I'm always available, day or night. My phone number is 570-328-4162. And, we'll catch you on the next episode.